If you're in a hot market, you might be finding it hard to afford deals if you're just getting started. Here's what we do. Local.
Big markets. Living in Columbus, 14th largest city in the nation.
Isn't that awesome?
It's crazy.
We made it.
We made it. Yeah, we're bigger than Boston.
Wow.
Isn't
I
that
guess I never really thought about that.
Isn't
That's
that
kind
crazy?
of cool.
That's bananas. But one of the challenges with living in a bigger city in a hotter market is that deals are more expensive. And so we get questions all the time of how do I invest in real estate if my market is too hot?
Too hot. Hot. Yeah, I mean, I think it's really just evaluating where you're at and what your goals are and what cash position you have and figuring out what market is going to be best for you and what type of deals are going to be best for you. So Columbus has grown like a weed in the last, I would say, most recently, probably in the last 5 years. And now we have Intel coming in. So that's going to, and Google and Microsoft and all these other ginormous companies. And so we're grateful for that. But yes, the price points are starting to expand. But I've always said about Columbus, and I think there's a ton of cities that are very similar, is, currently you can get from one side of Columbus to the other in about 30 minutes, depending on traffic. And I think that should be an hour. I mean, I would say the big metropolises of the United States, it takes that plus some to get from one side of town to the other. And so I think it's looking at those extended suburbs. I wouldn't say like the suburbs. So like here in Columbus, I'm not talking Hilliard. I'm not talking, Powell I'm not talking that. I'm talking further.
Yeah.
So we've seen a ton of traction in Newark. We were just at an event a couple days ago, and everyone was like, "Please don't, no more investing in Newark," because we had a couple investors there that kind of put their pennies in that neighborhood and don't want any more investors putting their pennies in. But I think it's expanding out 20 miles, 30 miles into these smaller towns to really make that buck work for you.
Yeah. So Newark, Mansfield, Springfield,
like Mount Vernon, Marysville, Marion. I think Marion's huge right now.
And I feel like we should address that for those of our listeners and watchers that are viewers that are not familiar with Central Ohio.
Yeah.
We're talking about suburbs that are like 30 minutes outside of Columbus.
Yeah. And I think to also explain, like, when looking at your market, expand your search, go out a little bit further, because I just think you're going to be able to find some additional deals that you currently are that make the numbers work for you when you start to expand out a little bit. And no, I think that's happening often in our market. And I think in those smaller cities, you're also still getting super strong rents. So it's not like you're deteriorating the deal itself by expanding out. And honestly, you're getting ahead of the game of the growth that's naturally going to happen in most of these areas. I can say that pretty confidently in Columbus. I would say, give us another 5 to 10 years and those people in Marion or Chillicothe will say, oh, I'm in a suburb of Columbus moving forward.
I would say, though, a piece of advice for anybody that's going into these smaller suburbs, you don't want to be the fanciest house on the block.
Amen.
So if you are doing a BRRRR, if you've got value add and you're going to keep it as a rental, make sure that your market rent or that your rent is in line with market rents, because when you are refinancing out of that hard money into permanent financing, assuming you're using a DSCR loan, the lender is always going to use the lesser of actual rent versus market rent. So if you're the fanciest house on the block and you're charging $1,950 a month, but there's a trailer park next door charging $550,
yeah.
Guess what? It's going to be closer to that $550, and you might not be able to get all the money out of the deal that you're trying to get.
And to highlight that again, even if you have it rented, doesn't matter. Like, these lenders are trying to protect themselves as well as you. Honestly, they're going to go off the lower of the two. There's a couple lenders that we have that'll actually do like 120% of that market rent. But still, like, we've seen, I would say in Columbus, we've seen this occasionally where people have luckily got it rented for these high numbers, but the market doesn't really show that those numbers are appropriate. And so that can definitely hinder your lending ability. So great point to make.
Yeah. Think like the bank. Think like the bank.
It's my favorite line. I think too often people don't think that way. And I think it's just highlighting, if this was your money, what would you do with it?
Yeah.
So
it's taking off those rose-colored glasses to see the red flags.
Yeah.
Right?
Yeah.
I mean, that's what's important.
The other big thing is we work with a ton of out-of-state investors. So I guess so again, if you're not located in Central Ohio, we could still work with you. Our lenders are not biased. I would say definitely in the hard money or DSCR route. Commercial, a little bit more squirrely, so we can talk about that separately. But out-of-state investors, no big deal. And so what we're seeing a ton of is people on the West Coast that are, have the cash, but their markets are insanely expensive. Whole nother side of the world of price points are now coming into our markets, but it's still making sure that those deals are hitting right for the cash that you're putting into the transaction.
Yeah. So, I mean, other options. So, okay. So you maybe don't have enough money to get into Columbus, and maybe you don't want to expand your search to areas outside of Columbus or outside of your metro area. What are some alternatives to get into real estate?
So there's some like crowdfunding that's going on. I think that's interesting. I think it's newer. And so what this really is just you have an allotment of cash. Let's just say it's 20, 30, 40 grand. You're not really able to find a deal that works for you in that space, but you're going to give this other dude that is collecting a bunch of money, and they're going to then invest that lump sum of money in various properties, from everything from hard money to DSCR loans to commercial properties, and you just get a piece of the pie. I think it's an option.
Yeah. It's like, and just to clarify, REITs or real estate investment trusts are akin to buying a stock or a bond. You're buying a piece of paper. You're not actually going to walk the property.
No, you're going to have no involvement.
You're not going to be managing anything, and that's not something that we do. That's beyond the scope of how we can assist. So if you would like to invest in a real estate investment trust or a REIT, you would just contact your local investment advisor, either your bank or your local investment firm, and they'd be able to help you out with something like that.
Yeah. So it's something, if you want no involvement, but you still want to be in the real estate game, sure, definitely an option. I would say more often I'm seeing partnerships coming together, which in its infancy, I mean, partnerships can be dangerous. They're like a marriage. I mean, once you start an LLC with someone, you might as well be putting a ring on that finger. And I don't know that people understand the seriousness of that. And so I definitely want to highlight that being the case. But I also think that, I mean, out of all the deals we do on a monthly basis, how many of them have members on it?
Yeah.
Most of them.
Yeah.
Most of them have multiple members where you're finding someone that you're comfortable being a partner with, and you guys are coming together. Either, someone has really strong credit or the other person has really strong assets, or maybe one person's going to property manage. If everyone can bring an even piece of the pie to the scenario, that is a way that you can scale your portfolio pretty considerably.
Yeah. Yeah.
So
absolutely.
Are you willing to take on some of those moving parts? Now, feel free to do your own shop. I mean, there's really no need to do that, but I will say that I sometimes get to the point where people have the experience, they have the information necessary, they know how to analyze a deal. They just don't have maybe the cash to get to that next step, and sometimes a financial partner can help with that.
Absolutely.
Yeah, let's get at it.